I want to share with you one of my own stories. All right. And this is a really, really, really unfortunate one. I went to high school with a really cool guy named Vince. Vince and I got along really well. He's a really cool guy. We always, there's some people in high school you get along with, and there's some people you don't. Vince and I were always cool. We were never like that, really that tight, but he's just a cool guy. When I got into the business of financial advising, Vince and I connected, and he told me he was a mortgage broker. And I was like, oh, this is cool. This is great. We can refer each other business. We can refer each other clients. And I talked to him about, life insurance, obviously, which is a far superior product than mortgage insurance. And I did the job of educating him on the differences between mortgage insurance and life insurance because he wasn't all that aware. Now, each of you should know that life insurance is a far superior product than mortgage insurance. And everybody you know should not have mortgage insurance. They should have life insurance instead. Why? Because mortgage insurance, the bank is the beneficiary, number one. So your family, when you die, doesn't actually get any money. All the money goes right to the bank. Okay. The second is because your mortgage payments decrease the debt on your mortgage. However, the mortgage payments stay the same. So you're paying the same amount every month, but the balance goes down. How does that make any sense? Right. And the third and the worst and most important is because the banks always have what's called post-claim underwriting. This is really key financial language for basically, we don't give a damn and you're not approved for anything until you actually make the claim. That's what post-claim underwriting means. That means the underwriting, which is the process of deciding whether or not your claim is valid and will be granted, is done after the fact, post-claim. Okay, this is the worst part of mortgage insurance. Life insurance, however, far superior, vastly superior product. The underwriting is done up front. Number one, the underwriting is done up front. So there's no games after the fact. Number two, your family gets the money, your beneficiaries that you decide on the life insurance policy, and you get to decide who gets the money and how much. Okay. And number three, your payments stay the same, but you get a large chunk of money and it's preset. So $50 a month, 500 grand, always for 30 years or however long you're making your payments on the policy. So for these reasons, it's clearly evident life insurance is a vastly superior product. In fact, there's a mini documentary from the CBC, which is the National Canadian Broadcasting, Association. It's on YouTube. You can find it. It's called In Denial. This should be in your toolbox. You should know this. Everybody should know this. So going back to my friend Vince from high school, who's a mortgage broker, when we got to know each other, I said, Vince, let me tell you, I told him, I educated him, I informed him. We promised we'd send each other some referrals. Okay. I never heard from him after that. 6 months later, we connected again. I said, Vince, let me get you some critical illness insurance. Let me get you some life insurance. He only had mortgage insurance. I quoted him. He said, yeah, I'll look into it. I'll talk to my wife. I sent him the quotes. He didn't do anything with it. Okay. 2 years later, about 6 months ago, he calls me, we talk, and he sounds a little different. He doesn't sound like his normal self. He's not pronunciating his words the same. It's a little odd. And I go, hey, Vince, what's going on? And he tells me, essentially, long story short, he got tongue cancer. He's fine. He's okay. Thank goodness. But he had surgery and he couldn't work for 6 months. And he survived and he's good and he's fine now. But he had tongue surgery. He had tongue cancer and they cut part of his tongue out. Now he's in sales. He's in business. He works for himself and he just sounds a little different. And he told me the debacle, the poop show, if you will, that was him going through the mortgage insurance claim process. So when all was said and done, he told me all he got was 6 months worth of mortgage payments. That was all he got. And he had a heck of a time getting that money. He basically had to fight tooth and nail for 6 months just to get that payment with the mortgage insurance company. And he literally told me, I regret not going with your choices. I regret that I didn't go with your options and your offers that you offered to me. And I had no words aside from like, man, I'm glad you're okay. Thank goodness. And that is horrible. That sucks. So all he got was 6 months worth of mortgage payments, which ended up being about $7,200. So the man had cancer, had surgery, couldn't work, couldn't talk for 6 months, couldn't provide an income for his family, which means his income dropped and his expenses stayed the same. So he's now in debt. And all he got was a measly $7,200 from the insurance company. And he had to fight tooth and nail for it. So he calls me up and tells me this, and he's like, I don't know what to say. I feel horrible. I wish I went with it. And I was like, man, I don't know what to say either. I wish you did too. And that sucks. And let's now do everything in our power to tell the world about this, because now you know you lived through it. This is a horrible situation. Had you gotten the life insurance, I would have given you a company where, if you couldn't perform like your job, they might have given you 50% of the life insurance benefit to spend for yourself and to cover expenses. You guys know that we have a total loss of autonomy benefit and a total disability benefit with some of our providers. But the main thing is critical illness insurance or disability insurance, which are insurance products that we offer, would have covered him in this example of having cancer, tongue cancer, and not being able to work. Do you guys understand? You understand the value of this? He would have received 35 grand. Never mind 7 grand. He would have received 35 grand. I literally pulled up the quotes that I sent him, and I was like, look, I sent you this quote for 35 grand. You would have had 35 grand. It would have cost you $70 a month, but you would have had 35 grand right now in your pocket because you had tongue cancer and you couldn't work. Had you taken the disability insurance, you would have had about 2 grand a month up to age 65 or for 5 years. So finance is a proactive game. Winning at the game of finance is proactive. He opted no, and he paid the consequences. And it sucks, and it's a horrible story, but these things happen. And the business that I'm in, the business that we are in, is the business of preventing problems. That's what we do as licensed financial professionals, financial advisors, financial planners, okay? It's preventing these headaches and problems for people, preventing pain. That's the business we're in.